Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is John Baugh, Managing Director with Stifel Nicolaus. John, how you doing?
I'm doing terrific. Thanks for having me on, Kim.
Yeah, it's good to talk to you. We're a little late, actually, in the cycle in talking about this, but I thought we'd just quickly run through third quarter results for the publicly traded flooring companies. Before we get into that, for our listeners' benefit, we just finished our December issue, and we're making some calls on how the year's going to end out. Looks like floor covering growth overall, and that's rolling it all together, commercial, residential, is going to be up about 4% in 15, which is about what it was in 14. Carpet is one of those stories we've been talking about, and it's a story where it may grow 1% this year in dollars and be actually down in units. And all of the growth is on the commercial side. It's up, I think, 3-4% on the commercial side and actually down in dollars residentially. So hard surface taking share. But we just got the Dodge report recently, and I thought that was very encouraging because you talk to the economists, and they're on both sides of whether or not we're at the beginning of a recession or not. And the Dodge report is very optimistic. They're saying that construction spending next year will be up 6%. Single-family housing is going to be up 17% to 805,000 units. And multifamily up 5% to 480,000, and commercial building up 11%. So those are all encouraging. Are you feeling like 16 is going to be a good year for at least the flooring business?
Yeah, well, a lot of things to comment on there, Cam. I know your listeners have heard me talk about, I don't know where we are in a cycle. I don't know what a cycle is anymore. We're so disjointed, particularly on the residential side, having collapsed with new builds 75% from the peak to the trough. And, we're in a multi-year level of recovery off of that, which frankly is good, for 6th or 7th year in a row of housing kind of climbing out. And yet the rate of that climb, I think, has been disappointing to many who have been, obviously in hindsight, too optimistic about the rate of improvement. But as an executive trying to run a company and be a retailer or a distributor, manufacturer, getting a slow drip up is an easier environment than, to your cycle question, we're going to peak now and then trough later and all of that. So I think from a construction standpoint, both residentially and commercially, obviously things look good. You mentioned carpet, and I was even a little bit optimistic about the second half of 15. I thought carpet residentially had a chance, maybe even a unit growth year over year, certainly dollar growth. It just doesn't sound like that's happening, and it sounds once again like the repair remodel or the retail segment is the piece that's really disappointing. Commercial activity's been pretty good. New build, both residentially on multifamily and single family, has been fairly robust. So still the same story. A lot of Americans don't have money in their pocket, and they'd like to spend it on flooring, but they can't do that repair remodel on flooring. So that's the piece that's weakest, and I think probably carpet has a higher share of that, with hard surfaces having a little bit higher share of the new construction piece.
We would have thought with the price of fuel, what we're spending to put gasoline in the car would have given them more disposable income, and would have maybe turned around and bought some flooring, but that hadn't been the case, has it?
Yeah, it hasn't. The vast majority of Americans are in such a world of financial hurt that they've got 6 bill collectors on their butts, and now they've got 4.
Yeah.
Thank you, gasoline coming down. So they're just not in a position financially where they can really spend that incoming money that's coming in. A lot of other theories you could throw out there, too. It seems like everybody, no matter what income strata, has to buy a $700 smartphone.
Yeah.
So it seems like it's the same old saying, priorities are elsewhere. But I think the bottom line is that we're still at recession levels. There's been zero recovery. It's been a negative number of inflation-adjusted, median family incomes. I think we're down something like 7% inflation-adjusted from the peak in '06. And until that number changes, we're really not going to have a robust recovery in a lot of parts of the economy, including replacing floor covering.
Mm-hmm. It's interesting to see auto sales are at a 7-year high. So, like you say, there's things you have to have. People are going and spending some money on. But let's talk first about Interface, traded with a symbol of TILE, and they had record earnings. I did interview Dan Hendricks after they released these earnings, and they're really having a pretty good year, aren't they?
Yes, they are, and I think the surprising story at Interface is how strong the gross margins are. And it's not just input costs coming down. The plants are running smoothly. The sales force is effectively selling better-end goods. So the earnings have been terrific. The stock came down pretty hard. Since we weren't recommending it at the time, we were kind of excited about that because it gave us an opportunity to upgrade the stock down in the high teens. That was all due to the fact that incoming order rates in the third quarter flattened out in the North American market, and that was deemed to be highly disappointing by investors. I would just say orders are lumpy. There was a softer tone in general to our economy in the third quarter on a lot of fronts, and that may have manifested itself in somewhat slower orders there. But the controllables in terms of cash flow and margins and things that management can control, Tile's having a heck of a year.
Yeah, and John Wells recently announced that he's going to retire next year, and I had lunch with him. And he was telling me that this year they have not only taken some share, but they've also been able to raise prices at the same time. So some of the things that he attributes to that is the fact that they obviously have very good-looking styling with David Oakey and what he's able to do with them. But also they went long on plank, and plank took off. Designers really like plank, and so I think that was another factor.
Yeah, plank has been a home run.
All right, let's move over to Mohawk for a minute. Obviously, the largest flooring company in the world, and their results were right about what they thought they were going to be, weren't they?
Yeah, and they have a good habit of doing that. Not every company I've covered in my 30-plus year career can say that. I was expecting a little bit more help, if you will, from the macro or the overall sales environment, particularly here in North America. We're just not getting it. And around the world, they're operating in places like Russia and Western Europe that are imploding and weak, respectively. So for them to sort of post this 5-6% organic growth, obviously they're doing acquisitions all the time, and revenues are growing a lot higher than that on a reported basis. But for them to hit those kind of numbers, margins in all three segments were strong. It was just another terrific quarter. And even though they've just on the heels of the IVC and Kai acquisitions, balance sheet's going to get quickly into a 2-to-1 or lower leverage ratio, which at least financially would put them back in a position to start acquiring again. So Mohawk seems to perform in almost any and all environments. They have an exceptional ability to manage through varying business backdrops.
All right, well, let's talk about Armstrong. Obviously, they're facing a restructuring, and they're going to separate the flooring from the ceiling business. What can you tell us about them?
I was actually pretty pleased. The margins in the wood side have recovered somewhat. I think things are sort of settling down a little bit there, given the tumult they've had the last 18 months or so. Look, there are obviously a lot of moving parts with the spin of the flooring business plan for late first quarter of next year. As a publicly traded entity, we don't know yet what the capital structure precisely is going to be. So there's a fair bit of uncertainty there, and that probably keeps a lid on the stock in the interim. But, I like what they're doing on the wood side relative to some of the mistakes I think they made over the last 24 months. They seem to be settling in there. They're trying to open this LVT line like everybody is. There's some drag there, getting a little bit of lower input cost, which is helping on the margin. They're certainly not hitting all cylinders, and there's a lot of management focus on the spin. So it's a tough transitional period, I think, for Armstrong.
All right, John, it's great to talk to you, and appreciate your insight on some of these publicly traded flooring companies. Again, been talking to John Baugh, Managing Director with Stifel Nicolaus, and you've been listening to Kemp Harr and FloorDaily.net.